Okay, welcome to TFC Daily. We have come to the last session, right, for this whole 8 episode thing because lockdown is almost over, right? We're almost done with this and we're going to go out. So it's been quite a journey. Thank you for your support. Do share this segment on your socials and leave your questions in the comment section. And if you're on the Mumu app, right, do comment. We have a team behind pooling all your questions and we'll do our best to answer everything, right? So this is the last, I'm not going to say every Monday, Tuesday anymore, right? By the way, this 8 episode series is proudly sponsored by Mumu, powered by Futu, which is an investment platform with a wide array of products from US stocks, Hong Kong stocks, ETF, REITs, and more. Okay, so I think their app interface is pretty fun. They have a lot of interactive stuff, 24/7 financial news. Essentially, it's like a free Bloomberg terminal, so that's really cool. So shout out to all of you tuning in from Mumu, and yes, we are seeing you here, right? For now, no more free Apple shares, but share your experience with your friends. And in the house today, we have Fritz from Asian Century Stocks. Hey, nice. Thanks for joining us.
Thank you so much. Thank you.
Cool.
Yes, you can call me Fritz. Fritz is my kind of a nickname, but my full name is Michael Fritzell. And I'm been in Singapore now for 8 years. Basically coming from a analyst background, been on the buy side for over 10 years. And before that, investment banking so altogether in the finance industry for 15 years. And Asian Century Stock is a website that I started 2 months ago, basically with Asian equity ideas. So I write long research decks on ideas that I think make sense across any industry and across all countries in Asia, basically. So yeah.
Nice, cool stuff. Welcome onto the scene of retail investors and talking to all of us. So that's very cool. Yeah, today we are going to cover a lot of like Japanese companies essentially, right? Even Delfi, it's very Japanese. So I look at the stuff like this reminds me of Japan. We can talk about them, as we go along, right? There's so much to talk about, right, in the Japanese market because I think it's very undercovered. People don't really talk about it, and they haven't. The broad market hasn't been doing very well for a very long time, but I think there are still a lot of very strong fundamental companies over there, which is probably something that you love, right? But let's start the session, with a little bit of market outlook. Like, what are you seeing? Like, what is out there today, and what are you focused on looking at these things?
Well, there are a number of broad themes that are really important. Obviously, like the COVID-19 and the way it's spreading is really depends on each country, and each country has different ways of dealing with it, and that has an impact on companies, especially cyclicals in each country. So this Delta variant of COVID really has had a big impact on some countries. We have a lockdown here, obviously, in Singapore, but it's had an impact across the region. And there's reason to think that it will spread further, to maybe to Korea, maybe to Japan, and to Europe and the US. And that's one major trend, because obviously that the children are also at risk of the Delta variant, and that makes it more likely that any country will lock down, which could have an impact on stock prices. So that's one thing. And then another thing that I'm looking at very closely is vaccination programs across the region. Singapore is doing really well, and then Korea, Japan, I guess, lagging a little bit. But I think, especially, you mentioned Japan, and that's something that I'm really bullish about. The fact
I can tell. The fact that we're going to talk about Japanese companies.
Exactly. And every Japanese stock that I've recommended or that I'm bullish about are basically cyclicals, like or recovery stocks, things like entertainment or transport, or stocks that will recover nicely, if there's full vaccination, which is most likely going to happen probably by first quarter of next year. I'm talking about the adult population, and then of course childhood vaccines will come later. But okay, so you mentioned broad themes. So vaccination is obviously another broad theme, and then related question is, of course, tourism, and tourist-dependent countries is like Singapore is one of them. But Thailand, I guess, is the number one tourist-dependent country. And vaccine passports are being released in Europe very soon, in a few weeks. And then US will come, and Japan. And then it will be like a slow process of countries just accepting other countries' vaccine passports. and that's going to lead to recovery in international tourism, which has still been really weak. So that's a broad theme. Otherwise, another thing that's worth mentioning is just this retail speculation that we've seen since the pandemic, especially in tech stocks, but also cryptocurrencies.
You like GameStop, AMC,
Yeah,
all,
exactly.
all
I
that,
haven't
all
seen
that
that for a while.
stuff.
Exactly. I suppose, in there's been bubbles throughout the past decade or two, but now it is, it's a little bit different. Like if you look at the number of options outstanding, we haven't seen this since 2000 or 1999. So it is quite different. Trading volumes are quite high in Taiwan, Korea, or Vietnam. So I think it's across the board. A lot of retail speculation, which to me is a little bit scary. I mean, you have to deal with it in a different way. Just be careful with what you buy. Make sure that it's has value. Like you're willing to own it for the long term.
Right.
So retail speculation is a really big theme, I think.
Why though? Why do you think so? Because lockdown, nothing to do, or it's just like spending power kind of like increase in some way? Or like,
Well, so I think retail investors, they tend to be momentum driven, and
Such a
it's
good
just
way, such a good way to say it, momentum driven.
they
Just
are-
means they're chasing hype, right?
I think so, and it's so easy. I mean, I've done that as well. Like it's so easy to chase something, and then it starts going down, and you panic. Like if you don't know what you own, or you're not willing to own it for the long term, and you see it go down like 20-30% in a few days, you'll panic and you'll just sell. Like it happens to the best of us. So
Yes.
that the momentum dynamics are what's dangerous. And typically stock prices, they go down like 7 times on average faster than they go up. So you think you can get out, but like if you're involved in this type of speculation, you're not going to get out. so I think you should be more cautious than before. So that's one theme. And another theme that I would like to emphasize is like inflation is high, especially in certain countries like United States, and that's due to budget deficits. They're just giving out cash in the US, but also other countries like Korea, and that cash is being spent on fun things, consumer electronics, whatever, and that has an impact, I think, on it's like a debasement of the currency, and typically if that continues for years and years with these high budget deficits, we could see high inflation. You can really see inflation picking up, and if that happens, you probably want to own more inflation hedges, which would be resource stocks or consumer products companies. So.
Yeah. Okay.
So that's one
I'm
thing.
hearing,
Yeah.
I'm hearing an inflation bull here.
I think so.
It's very hard to find a bear this day, or anybody that believes in deflation, right? So
Okay.
yeah. But that's a
Yep.
different story for another day. Yeah.
Yeah, I mean, it's all about the budget deficit. So QE, it doesn't lead to inflation because it doesn't affect consumer spending or overall spending in the economy. But if you give people cash, they will spend it. So that's what's different. And
I bought a bike. I bought a bike with the cash. So yes.
There you go. So that's if that continues, which may or may not happen. Like I think in some countries it will continue to be like government spending will continue to be quite high, including the US. So that's another theme. And the last theme that I think is worth mentioning is defense. Like overall defense spending in East Asia is likely to continue. The People's Republic, they keep spending about 7% more each year in USD, and everyone else has to increase their spending. Japan is speaking about changing the constitution to allow for higher spend than 1%. And if that happens, it will lead to a boom in defense spending, and all these contractors will do very well, I believe.
Interesting. I recognize that part. I just never thought of it in that way. So that's good. So then could you kind of walk us through a little bit of your investment ideology? Like how do you what are your core ideas, and how do you decide on what to invest in and all that jazz?
Pretty simple, to be honest. I just buy.
That's what everyone say. That's what everyone says. That, oh, we're pretty simple and all.
Fair enough. So I'm looking for value, and value to me is discounted cash flows. And you only get cash flows if the company has some kind of unique franchise. If it doesn't have that, if it produces a commodity product, you may get a few good years in a cycle of excess cash flows. But typically, you want to have some kind of unique product or unique service that no one else can match. That gives you pricing power. That gives you high return on capital, and that's when you can really discount cash flows properly. And another part of that, quality aspect is of course corporate governance. That the owner does what's good for the minority shareholders, and that involves just looking at what they've done in the past. How have they treated minority shareholders in the past? Have they done rights issues, at low levels, or even worse, like directed private placement to themselves at low prices? These kind of things, or even better, if they buy back stock, that's just a perfect sign of a good capital allocator. Seeing that, like Tencent, they're just buying back at exactly the right time. That's they really know what they're doing. Same with like MediaTek. You can see, go back in history, look at when they repurchase shares. They do it, when the stock is really undervalued. So they probably have their own financial model, and they say, okay, now we're 50%, too cheap. Let's buy back stock because that's the best use of capital. So, conversely, some families, like in Indonesia, that every stock that they list on the stock exchange is going to go down. So,
Yeah, because you talk about corporate governance, right? And I think this is something that I've not heard. I've heard it elsewhere, but so far everybody that come on, nobody has really talked about corporate governance.
Oh, really?
And so it's like it's interesting because corporate governance is super big in Europe. Like Europe is super big in corporate governance, and they rank very, very high. But it's not so prevalent in Asia. So I'm trying to get your sense of it.
It's just like if you don't know that you're gonna get a part of the cash flows, you cannot discount them. So you got to know that they will pay it out as dividends or buybacks or reward minority shareholders in some ways. And if they don't have any track record of doing so, especially in Korea, has a lot of companies, they really work for the families. So then it really becomes more of a speculation then. Like you're hoping for that they will get a higher P multiple, or that the earnings growth will kind of catapult the share higher. But you cannot say with high confidence that you will get these cash flows, which you probably can do in many places in like Scandinavia or Australia or somewhere. And that's partly to do with the just rule of law is a little bit weak in some countries. Singapore obviously very strong, but let's say in India or China, you kind of have to trust the person, like you're betting the person.
Even I feel like I don't know if I could do that. Just trusting the people, but yeah, it's a thing for sure, right? So I think and it's extremely unique relative to this part of the world. Like there's a lot of big companies like what you say, which are family owned, right? It's like big entities owned by families. They're listed in the public space. You can buy them. But actually, they're all family. You look at the main shareholders. You look at the senior management. And it's like, why are they like all kind of related? Do you tend to avoid these kind of companies?
It depends, but I mean, it really depends on each group. I think each family has a different, or each person, I would say, has a different approach to how they deal with minority shareholders. So some have really good reputations, like the Gokong Wei family in Philippines, or like this Cheravanont family in Thailand. They have good reputation. The businesses they run, some of them have done really well, like CP All or Sino Biofarm. So it really depends. Whereas maybe like the Riyadi family in Indonesia, you probably want to be a little bit careful there. So I think you just have to look at the track record, and it has to do with especially corporate actions, like what they've done with the shares, like dilutive share issues at low prices, or do they do buybacks, and do they purchase shares themselves? That's also a great sign, like insider buying.
Right. So it sounds like you really went into deep dive of all these companies to really
I
find
do,
out
yeah.
the relationships. Right?
Yeah, I
Because
do.
it's a lot of effort. Yeah.
Yeah, it's a lot of effort. I mean, truthfully speaking, with some companies I spent 1 or 2 months. So it's almost like a private
Wow.
equity approach.
Yeah.
That's being from my background of working for a family, investing their capital. They obviously care a lot. What happens to their money. But right now, I would spend about 2 or 3 days at least on each stock, and unless you do that, I think it's really difficult to have any conviction.
Good. Thanks. Yeah, and I wanna reiterate that we are not recommending anything. This is for entertainment and education purposes only. So
Sure.
for everyone that's tuning in, join us, have fun, put your questions in the comment section, and we're gonna dive right into the companies, right? So we have prepared 3 companies for everyone, and the first company, let's talk Delfi Limited, right? So why this company? What do they do?
Okay, so I mean, Delphi itself, you may have seen their.
I have seen that candy.
Their candy, the chocolate, and it's pretty. I would say pretty standard. It's not necessarily better than what the MNCs offer. Maybe the opposite is a little bit below that. It's more mass market. With the ingredients they use are typically not like cocoa butter. They will use palm oil instead, and the branding is a little bit older, but it's been around for like 3 generations now, 1950s, 60s. So it does have some kind of brand recognition, quite strong, I would say. Like 45% market share in Indonesia. That to me is pretty strong. So just looking at the stock, I was quite surprised to see that it's trading at less than 400 million USD market cap. It's almost like in Europe or US, you would see that as like a company that almost doesn't have a product that could trade at 300 or 400 million. But this has like 50% market share almost in Indonesia, which is a huge country. So that's quite interesting. And doing research, I found that the management team is quite good. Like they are quite professional actually. They pay out dividends like over 50%. They are serious. There's not that much related party transactions. There's some, but it's mostly legacy stuff. So I'm fairly comfortable actually with them. But anyway, so the broader case is about it's about the brands that they have and the products that they have. They also distribution network. Obviously, they talk about they having access to 450,000 points of sale, which that advantage has been huge. Maybe it's getting a little bit less of an advantage because of e-commerce and also the shift towards modern trade. But still, it's really quite impressive, and I think that's an asset that I think multinationals will be really interested in having, given that Delphi is like one of the last few companies that are still on the market for them to acquire.
So you think this is an acquiring play? By the way, for everyone that don't know what do they do, choco means. I don't know. Do you guys eat choco minis? Like like the fake M&M kind of thing.
Yeah.
It definitely has more palm oil than cocoa butter, so it tastes fake, but it's like childhood. There's this childhood taste to it. So that's the part.
Yeah, actually, I actually quite like them. I think they're pretty good.
And you're actually thinking from a acquisition play? Is that kind of what you're
so.
saying?
I mean, I think so. but even if not, that's a way to value the company. And I know that they've approached John before, John Chuang, and he's said basically, from what I heard, rumors of course, but he said that the price has been too low for any for any discussions to even take place. They're getting older. I mean, he's in the 70s, and they're not going to give. I've spoken to them, but they're not going to give any guidance about whether they're going to sell themselves. But it could happen. But even if not, you got the COVID recovery angle to the whole thing, and also you get a dividend. So, admittedly, it's more of a conservative. It would be suitable for someone really conservative, because I don't see any near-term acquisition necessarily happening. It's not like there's a process ongoing. You might have to wait for quite a few years.
Yeah.
But certainly.
Could you help us understand a little bit more about the snack market? Essentially, this is like FMCG, and they're in like chocolate snacks, So then there's in this space, there's always separation of like standing, right? Like premium, mid-tier, and then like mass market and all that stuff. Could you just kind of walk us through a little bit for people that don't particularly dive in this space of the FMCG market? Like where does Delfi sit in this spread of various products in the chain?
Right. Okay. So they are definitely in the chocolate. I mean, they're doing chocolate, and they say that they have products in each segment, but it's really targeted
so.
mass market. It's really mass market, and which is fine. That's what Indonesians can afford at this point, and there's nothing stopping them from going more up markets. If like replacing palm oil with coconut butter, for example, they can do that if they want. It's basically a mass market product. They have different types of brand names. They have a bar called Silver Queen, which is inside would be cashew nuts, and they have different flavors of it. But it's a bar, chocolate bar. They have their own Delfi branded chocolate bars as well, which will be slightly more like a copy of Lindt or something like that. Cheaper, obviously, but yeah, that's also chocolate. They have a product called Ceres, which is a spread for bread. You put it on like toast or something, and that's like a Dutch or Northern European product that they imported into Indonesia, and it's a great success. I mean, they kind of have that market for themselves. It's not necessarily growing, but they have a pretty distinct and unique position in that market. And they have a variety of other products, including the Choco Minis that you spoke about. So that's pretty much, I would say, the major products that they have. And the reason, I mean, it is interesting just from a consumption perspective, because Indonesians, they don't consume a lot of chocolate yet. They have like 1/4, I think, of Japanese consumption per year in kilos. And compared to Europe or US, it's like a fraction, a few percent. So there's a lot of upside.
So you believe that Indonesians are going to be consuming more, and that is the upside. Like we're going to see growth of the company through increased consumption.
Potentially. I mean, I think I don't think there's a lot of upside, but there's potential. It's everything has to do with incomes. So for the similar income countries, it's not the case. It's not that Indonesians consume less. They could probably consume the right amount given their GDP level, but that could increase. I know there's reforms going on in Indonesia. They're trying to get more companies set up base there, and at the same time, Japanese companies are trying to diversify away from China. I mean, it's possible that incomes will rise in Indonesia at some point. So it's I mean, it's plus it sounds good when you say it.
Fair.
As a value play, right? How long are you willing to hold on to this position? Like hold until you're right, someone acquires it or reaches a certain valuation target?
I'm just a punter like everyone else. Like I like to see some catalyst. So this is not something I would put like 50%. I would put maybe 5% and just sit on it for a few years. You get a dividend yield, and at some point something will happen. I do think it's stable enough, and it's it's a strong enough company that you can be pretty safe with this. You don't have to be, you can be very comfortable holding this. And at some point, it will adjust to a higher valuation, I'm sure.
Right.
Okay,
But
fair,
what are
fair.
some of the risks then?
Well,
People stop eating chocolate. Nah, that's not gonna happen.
Yeah, and I saw comments. I've been reading about them in Indonesian media, and like even MNCs, they say that they're hard to beat. It's hard to beat Delphi, which is surprising. They have a strong domestic competitor called Mayora Indah, and with a few brands like Choki, which is really doing quite well, and they've been
Sounds
taking
so
market
familiar.
they've been taking market share, and for the past few years. But
I ate Choki before. Just say, yeah, continue.
actually not bad. Actually not too bad. But so that could happen, that they lose a bit of market share. But I mean, I'm not so concerned about that. It could happen that the second generation takes over, and that will change the way it's being run. But that's really a very long-term issue. And none of the kids, there are 2 kids involved in the business, none of them are in senior management positions. So that's not too bad. I would say maybe the currency, the exchange rate. So that's been an issue in the past. That could be an issue. Maybe short-term COVID recovery. They don't have access to mRNA vaccines, so their recovery will be a bit slower, maybe. But that's a short-term thing. So
Okay, fair. So this is like super deep value. Do you compare it to like your other guys in terms of like people that are doing chocolate, your Mars, all those guys? Like, where do you compare them to in terms of like, like, oh, you say that this company is like super value, right? Like in what sense? Yeah.
Oh, that's a good question. I mean, okay, so Mayora Indah is listed in Jakarta, and they have a multiple that's about twice as high. And I do think that I hear that they have some issues with the corporate governance as well. Like the corporate structure is not that clean. So I think if Delphi was listed in Jakarta, I think they would have traded at double the price from today. So it's now at P12. There's upside as well, like the Indonesia, Philippines, like the factory utilization is only like 55%. They can, if they had a slightly higher utilization of their current facilities, both logistics and as well as production facilities, they can get higher margins, especially in Philippines. So that would lead to slightly higher margins. So it is. So this twice, the 100% upside, I think there's more if they're able to squeeze out, slightly higher margins. And you can see if you just check, Lindt or other MNCs, Hershey, they have higher margins. So so there's definitely upside, but it's hard to say exactly how much.
Yeah, but essentially they have spare, capacity, production capacity sitting around, right?
Yeah.
But then, are we looking at like increase in market share? Like, are they doing like trying to acquire, getting more people to consume? Or are we just gonna wait for the Indonesian consumer to like consume more? Like, or are there any growth plans for this company? Yeah.
To be honest, it's well, they've been doing okay. So 2018, 2019, they have organic growth of 5 to 10% per year. Pre-pandemic, they had a few tough years, 15, 16, 17, when the currency depreciated, the Indonesian rupiah, and then they also did like a rationalization of the products of the products they have. They reduced the number of products by 35-40%. So that led to a decrease in market share. That's just because they wanted to adapt to a new environment. Like they knew that some products were not that profitable.
But they were not the only ones. They were not the only ones during that time. A lot of Procter & Gamble, a lot of people cut products over that period of time. Yeah. Okay. So they're not the only ones. Yes, for those few years, there were just a lot of brands being chopped. Right. So that's pretty interesting. Or being sold down, consolidated. I don't think they're unique.
Maybe it's also due to e-commerce. Like you brand names matter more, in e-commerce. Yeah, I guess it also heats up competition in a way. But anyway, so to your question, it is possible that they will continue growing like they did pre-pandemic. But we'll see. I know the Silver Queen is doing quite well. Their chocolate bar, for some reason. I mean, I suppose it's a
Never
good,
tried it. It's always
Never tried
been
it?
there. I always see it, but I'm gonna try it after this. Yes.
You can go to Indostop, Pali Bar, or
Uh-huh.
look, Lucky Plaza. They have one as well.
Nice,
Yeah.
nice. Okay. So that's pretty cool. For all of you that are listening, if you have any questions about the Indonesian snack market or FMCG in general or Delphi in specific, please drop it in the comment section and we'll pick it up. And kind of give you whatever feedback that we have. All right. So I think you've provided quite an interesting over arc about this company, and I am definitely interested to see it after this. Like, go and check it out to see if they have any growth plans. What is the strategy and all this stuff. Because maybe for me, I'm not so value like, okay, I was like, value is important, but I want to see some sort of growth potential. To me,
Yeah.
that will reflect in a higher value over time, right? So that's my take, right? But good, thanks for sharing. Now let's move on to the next company, Ichigo Hotel REIT, right? So like you said, it's a recovery play, or like Japan is huge on tourism and all this stuff, right? Walk us through why this REIT in particular.
I mean, okay, so the reason is basically the vaccination program. I'm bullish on it. They're talking about they were targeting initially. We're targeting 1 million doses per day by mid-June. That looks quite optimistic, but they are definitely ramping up and probably among the best in Asia at this point in terms of the number of vaccine doses per day, and they're relying on mRNA vaccines, which are really effective, at least for adults. So the potential for recovery in tourism after this happens, after the adult population has been vaccinated, which is probably 69 months away now, is pretty strong. And because I follow what happened in Israel and the US, and the recoveries have been very strong. Like Booking.com, they're seeing traffic in Israel like up 20-30% at least, I think. There's just so much pent-up demand for leisure travel. And I know the Ichigo Hotel REIT is not actually, it has a little bit of business travel exposure as well. But still, I mean, the whole sector will do nicely in a recovery. And I do think the people have been staying at home for such a long time. They will be very happy to get out there. So it's basically a play on that. The reason I'm bullish on this company in particular, there are two reasons. One reason is that it's very rare in the Japanese hospitality REIT industry for a company not to issue shares like at a low level, and they just refuse to. They say we're not going to issue shares below an NAV because it just doesn't make any financial sense. It's run by a former hedge fund manager who seems very rational. So my friend who lives in Tokyo, he met with him personally, and he says he says that he makes perfect sense. Like he's not fooling around or trying to grow the empire as so many other REITs do, just issuing shares year after year to increase the empire, the own empire that they can take money from. This is not the case. This is quite rational in their capital allocation. So you don't have to be afraid of that. You can actually trust that the net asset value that they report, and also my own calculation, I've valued each property as well together with their liabilities, and I get to a number that's slightly higher actually. So they are conservative, I think, in their calculation of NAV. You can trust it basically, and right now I think it's trading at 96,000. It's gone up a little bit last few days, but the value is probably 135 or 140,000 per share. So there's still another 40-50% upside. 40%, I guess.
Yeah, in your perspective, not a recommendation, by the way, guys.
Not a recommendation. Yeah.
we must clarify this thing. Yes, sweat. Yes,
yeah.
Theoretically, yes. Under
So
Fritz model's best situation, this is what we're going for.
it's possible. I mean, it's kind of I would say it's a high quality company. Like they're doing the operations are really well managed, and you can go into Booking.com and look at the hotels. They are well managed hotels. They're not run down or anything like that. They are. It's a good operation, and so it's a well managed company with you know pretty clearly what the recovery potential is if there's tourism recovering. Of course, international tourism will take longer, but at the same time, there's all this pent-up demand for leisure travel. So,
local tourism.
but I mean, we'll see. I mean, I thought initially that the Tokyo Olympics could be a trigger as well. It doesn't seem to be the case.
Nope. Yes. Wait,
But-
just a little bit of understanding about this REIT, right? Are they like owner operator, like they operate themselves also, or do they have master leases and they lease it out? And what is the kind of rental arrangement with them?
Okay, so sorry. So Ichigo, the sponsor is Ichigo, which is another company, and this is a REIT managed by Ichigo.
Yes.
So the agreement is pretty vanilla. They manage it, and they do provide advice on capital allocation. But the management is run within the company.
Within the REIT.
Within the REIT, that's right.
Okay, so the operation team, everything is under the REIT.
Sorry, yeah, that's right. And then advice from Ichigo, I think, is only for like transactions. So new buildings, that kind of stuff, would be injected, or rather, it would be done via the sponsor. And there's a certain profit sharing arrangement and so on, but I can see exactly what the terms are. But it's similar to what you would see for other, I think, type of REITs.
Yeah, because some of the hotel REITs here in Singapore, they do master leases, right? They will lease it out to someone else, and then they will manage the whole thing, and then they will rebrand. They just own the building and all that stuff. What I'm hearing from you is Ichigo actually just owns the whole thing, and they operate the whole thing. So it's their thing, right? They don't have master lease. They operate themselves and list on Booking. They do everything on their own.
Right.
Okay. And I went through the hotels. Like I just went through a quick look at all of them. It's like very stereotypical Japanese suburb vibes, right? It's not the fancy big hotels, so they literally look like Japanese buildings. For all of you that have been to Japan, those kind of very like random buildings that you will not stop and take a look again, and then it becomes a hotel, right? So why specifically something like that, right? Aren't you concerned that like the big brands are in the game, or or do you think like this particular REIT is targeting a very different market segment?
It's mostly to do about my confidence in the management, but I was going to mention another aspect of the operations as well. But you're right. I mean, you're really reliant on these platforms basically for selling your services. And they're taking a big cut, so that's a tricky situation to be in a little bit. And you have to. I mean, it's a competitive sector, and you have to be a good operator to be able to survive. I think. So it's not necessarily the highest quality, and you're not going to see this company grow very much either. Like if you're owning a lot of these fixed assets, you won't compound money at a high rate. So this is a recovery stock. You sell it. I think there's a demand for these yielding properties or REITs, but it's not necessarily something that you want to own for 10 years.
Fair, interesting. Yeah, and like platforms like Booking.com, they're taking like 30% off top line, from a lot of these kind of smaller players, which is pretty wild and pretty nuts, right? As a REIT operator, as a REIT, that runs their own show and do their own thing, do you think that they can outshine their competitors, or is it just purely, are we just looking at this from recovery once it's out and we're out, like exactly like what you said? So there's no long-term holding possibility of this company, or what are we looking? What is the play?
I don't think so. I really don't think so. I mean, that's not my plan, at least. I would sell at one. I would sell theoretically. No, but yeah, no. I don't think you would. If you want to own anything, in this group for a long term, you want to own the sponsor, Ichigo Inc.
Mm.
because that's much more profitable business. To be honest, it's not that they're necessarily sucking cash out of the business, but it's just asset heavy. It doesn't compound, so that's the issue. That said, though, I mean they have one advantage, and they borrow at like 1%. And in Japan, it's not that easy to get access to borrowing at all. So only a select few companies can get access to borrowing. And if you borrow 1% and you invest, even if you invested 5%, you can create value.
Your credit rating is amazing to get it at 1%. So that's
Yeah,
pretty well.
They do have some capabilities, some room to increase leverage. So that could be some potential there, but it's really a recovery play.
Okay, so then I mean, recovery is a broad market thing, right? There are so many other hotel REITs. Why specifically this one? Like
I looked at all of them, but none of them
exactly.
none of them could pass this test of not issuing shares at low levels, like below NAV or below book. Like
Why is this
Invincible REIT.
important? Why is this important?
I know how they think. Like people build empires. It's not just. I mean, it's not just in Japan or Asia, or everyone does that. Like U.S. companies as well. Management teams who are hired guns, they want to increase the size of their pie that they can take money from, and that's natural. But at least like when I started looking at these stocks, they were trading at least half of what they should. So issuing shares at this level, that's not a good sign at all. What if, it also makes it really, really difficult to have conviction. So what if the stock price continues to go down? What if there's a new variant? Stock price continues to go down and they issue even more shares. Like you have no control over it. Like you can get diluted into infinity. So
fair. That's interesting. Okay, so you're really coming from the idea that all these other companies were just issuing new shares while they were being beaten down, and based on their net asset value, they shouldn't be doing that, right? So that they're discounting everybody, unnecessarily in that sense. So you think they should load up on debt, or what is the situation?
I think they should. Within the next 9 months, just squeeze a little bit more profits out of it, increase the dividends, and then I can get out at a high price.
Okay. Recovery play, pure play recovery. Okay, interesting. Yeah, because I look at the hotels and I was like, they are not the fanciest. They are not really in the core of town. Like, they're not in the center of Tokyo or Osaka or Kyoto, right? So they are a little bit more. I think when you put it into the Singapore context, it's kind of like the Hotel V. They kind of REIT, they are like somewhere in town, but they're not in the core of town. So do you really want to own those guys? I was like, I don't know. You must have some serious conviction in buying at a good price, right? And that's a whole ongoing discussion. Yeah, for everybody that you're listening to this and you have particular REIT that you want us to talk about in Japan or maybe in other parts of Asia, I think Fritz can also give you some comments and some ideas if he has done that study, right? So yeah, just feel free to name drop in the comment section and we'll try to give you our best understanding. So yeah, okay, it's cool. Hotels, Ichigo Hotel. So let's move on to the last company that we're going to talk about today, which is Koshidaka Holdings, right? So what do they do, and why this company? What is so interesting about them?
Okay, so in the next in the last 7-8 years or so, I've kept track of basically all spin-offs that have been done across the world, just because they sometimes they give rise to really good opportunities. I had some good experiences in the past. So in 2000, I think it's 2020, the Curves Holdings, which is a fitness gym operator, they spun off this Koshidaka, which runs a karaoke bar operator. I mean, they run karaoke bars, especially in Japan.
Manakiniko, what the hell?
Yeah, that's right.
Okay. Yes.
Yeah.
I went there. They have local branches here.
Yeah, local
Probably a
branches as well.
franchise arrangement. Yes.
Shut down
Manakniko.
obviously, but
Okay.
yeah,
Yes. Shout out to them.
it's it's in theory it's a pretty competitive business. They've done extremely well despite this. I mean, they've been, I suppose, rolling up smaller operators and doing it profitably, which is quite rare. So they are really a good capital allocator in terms of what they've done. It's just quite astounding, and they've been able to grow earnings. And in fact, this is the first spin-off ever in Japan. So I know there was some changes to the regulation a few years ago that enabled this, but they've also done buybacks, and in Japan it's just quite unheard of. So they're modern in their thinking, and that's what I like to see in an operator or a capital allocator. But in terms of the business, so they run karaoke bars, and that's obviously been terrible in a pandemic. If you sing, you will basically have a
You're
projectile
banned from singing.
COVID-19
Yeah.
of SARS-CoV-2.
Choirs can't even
it.
sing now. Yeah.
Yeah. So they've been hurting. Sorry.
Choirs can't sing. I was like, what? Do you still call them choirs? But okay, anyway. But yeah, what is the mechanics behind a karaoke business? Like, how does that work? It sounds very capex heavy, and it takes time for it to come back, right? So can you kind of, okay, a lot of us we know how to sing karaoke, right? But what is the business model really like? Right? Can you kind of walk us through that?
I think they most of the time they lease. They do they lease. They don't own the property themselves, and so it's a business of running operations, marketing, and also just outfitting. Most of the equipment comes from these local Japanese suppliers, and then it's just a matter of choosing the right locations and then marketing yourself effectively. So their positioning is quite low end, mass market. So it's not fancy. It's not fancy at all. But I suppose it's all about execution here as well. Like being able to do it profitably is about execution when you're at this price point. So they had this strategy. I think, if I remember correctly, of placing themselves near like railway stations. There are like tricks like that. Near the railway station, so you can get home, conveniently afterwards. But yeah, it's part of the culture, and then it's about, of course, selling added products like F&B, selling drinks and so on to these patrons, or like people coming to sing karaoke. So it's a little bit similar to cinema that way, and cinema has also been hurt badly during the pandemic. It's not I mean, is it a bad business? I would say it's probably quite average, just like cinema is. But somehow, with these added beverages and so on that you sell, somehow you're able to make decent money. Like you're a little bit captive when you're in that room. Will you care if the drink costs a little bit extra? Probably not that much. You're going to pay up a little bit. So I suppose that's part of the unit economics. But yeah, I mean, it's all about COVID-19, thinking that at some point it's going to end. I would expect it to end sooner than it has, but still it's been pretty.
Okay. And karaoke is a big thing in Japan, right? It's everywhere, and there are probably more than one company that is doing karaoke like listed. I'm not clear about this, right? But why these guys, right? Like, if you say that they're operating very well, what are the things you look out for when analyzing that they're operating very well? What are their numbers like, and then all that stuff?
Yeah, I'm looking at obviously like overall financial metrics, things like ROE and so on. And I don't have the numbers in my head, but I think it's definitely in the mid-teens or something like that. So that's acceptable. Let me see if operating margins, 12% is pretty much in line with the industry or slightly better. Of course, Japan always tends to have slightly lower margins because Japanese companies, they have difficulties firing people. At least these bigger companies, with
They pay very well. Yes.
and in recessions they don't fire them. So
It's a contract for life.
Yeah, in many cases. So ROEs tend to be a little bit lower, but they've done quite well in terms of the financial metrics. So that's basically what I'm looking at. Otherwise, you can look at the growth rates in EPS and so on, and I think it's been acceptable. Let's see here if I have numbers. Yeah, you can look at my presentation as well. But yeah, I think they are reasonably good operators.
Okay, pretty interesting. Cool. And they also have like a bathhouse business, from what I'm seeing here.
Yeah.
Yeah, right. So
Yeah.
bathhouse culture, it's like, well, we're really going to this like very localized Japanese way of life, right? So bathhouse is super localized, and also it's a very Japanese thing, right? So like, how do we understand such a business, and what are we looking at when understanding bathhouses?
Frankly,
We have
no
come
idea.
to this point, guys. We are studying bathhouses. We're trying to analyze the business of bathhouse. Okay.
I should do due diligence probably, but to be honest, answer your question, I have no idea. I haven't done research on it. It's a small part of the business.
Okay. So it's a smaller part. So when you look at Koshidaka, you're really looking at the karaoke business. That's the main thing that you're looking at.
Yeah, that's right.
Okay. Interesting. So
is it
I
on
think,
a is it on a similar play as Ichigo Hotel? So like you're just gonna wait for a while, and then once you reach the price, then you exit, or is this another kind of play?
That's right. So, but I think you can own this, more for the longer term, given that it is not asset heavy, and the track record is very good in terms of their strategy of growing. It's not like the market is growing; it's not really growing all that much, maximum a few % per year. So it's more like taking market share. Them being slightly cheaper than others in the way that they've done business. So it could continue to grow, and who knows what the right multiple is. Frankly, I don't think it's necessarily all that high, especially in a global context. These days, multiples have gone up across the world. So I can pull up
AMC.
Yeah, exactly. I can pull up Bloomberg, but I don't think it's all that high actually. So it's not necessarily the case that 750 is the limit. Yeah, I'm gonna sell probably at some point when it reaches a good level. Now it's 670 something. It's already up 60% at least since the recommendation.
Nice. Okay, that's cool. Good stuff. Yeah, I think broadly speaking, a lot of people may have interacted with the brand already. Whether do they know that this is part of this company, that's another thing, right? Because they actually have a branch here, and they do self-service. So it's a pretty interesting karaoke concept, because I think over in this part of the world, people are still very used to being served by whoever that like servers, right? Servers come in, they kind of take care of your needs in the karaoke, but actually Manakiniko actually is like fully self-service. So I think that cuts down operational costs by a lot, right? So they have like a whole space, you just do it on your own, and then you do your thing, right? And then nobody comes and disturb you. There's no awkward people coming in to see you singing. So that is that's a pretty interesting way of running, and yeah, that's kind of make them a little bit more competitive from an operational level. So that's pretty cool. Yeah, we have one question about REITs. I'm gonna pull it out. So, have you looked at ARA US Hospitality Trust? Would you consider that a recovery play for the US?
No, I have not. So I cannot comment on it.
Okay.
I cannot comment on it.
Yeah.
But
okay,
I can obviously speak about overall recovery conditions in terms of it's a hospitality REIT, wasn't it? ARA.
Yeah, hospitality.
I may have looked at it a long time ago, but yeah, certainly it's booming. Like travel in the US is just booming right now. So for sure, like the underlying trends seem to be quite positive. Then again, I'm finding it really difficult to find cheap stocks in the US. So do check what the valuation is, and that you're not overpaying. So that's the only recommendation I have.
Yeah. Since we're talking about Japan, right? I want to talk a little bit about the macro factors in Japan. All right, like,
Yeah.
are you concerned about like the demographics? Like, it is an aging population, and
Yeah.
they're not really, they're not
Mm.
producing. It sounds so weird. But they're not reproducing as much, and all that stuff. That's how economists talk about productivity, right? Like, they're
Yeah.
not giving birth. Fertility rate is low. So, are you concerned about the kind of macro factors in Japan? Because like we're covering 2 Japanese companies today.
Yeah, for sure. I mean, yes, but although it depends on what kind of bet you're making. Like if you're buying a fully valued stock at P20 and you're making that it's a matter of 3% growth versus 1%, then demographics, they really start to matter. But if you're buying something that's really discounted on a specific recovery kind of bet, then probably it doesn't matter all that much, I would say. But yeah, it is problematic, and especially in some industries like consumer products, you want to have like demographics is a key part of it, and Indonesia is good in that way, and also Malaysia, Philippines, they have good demographics. So it really depends. Yeah, I suppose of course it's a negative, and I should also say the same is true. Like the fertility rates in Korea and Singapore, and in some parts of Europe as well, they're really quite bad. It's a challenge. It's definitely a challenge.
Yeah, for sure. But I think a lot of other parts, like in Singapore, they're trying to replace the lack of birth
Yeah,
with foreigners, right?
true,
They're trying
true.
to, but Japan is a homogeneous economy, right? You go there, everybody is Japanese, and it's a thing, right? So they're
It's
not gonna.
it's a huge challenge. A huge challenge, exactly.
So do
Exactly.
you see long-term value play in Japan, or are you really just kind of riding? Because we're talking about 2 Japanese companies, right? So are you seeing like
Yeah.
long-term value in Japanese companies, or are these 2 just because you wanted to search for a recovery play, and then in the US it's already bought out?
I think it's pure value.
Not only. In fact, okay. So in terms of Ichigo, I have done a lot of research on the travel industry, like cross-Asian travel industry, and I wrote a post about it. It's on my website. It's behind a paywall, so you. But anyway,
Gotta jump through it. Yes.
Yeah. So, but I've done a lot of research on it, so I know pretty much which stocks are kind of tilted towards Chinese tourism, and Ichigo is kind of one of those stocks. Like in terms of growth themes, Chinese tourism is one of those big themes. Like only like 10% of Chinese have passports versus 40% in US or 50% plus in Europe. So that's like a theme. So it really depends on the sector. Like maybe like cosmetics companies in Japan, they can grow forever because 1.4 billion Chinese, starting to consume cosmetics. That's a huge trend. Huge trend. That's same for Korean cosmetics companies as well. So there are trends where there might be export opportunities to say China or elsewhere in the region, like Southeast Asia.
But that is all piggybacking on China, right? It's not like domestic.
That's right. Yeah.
Japanese market, right? So we got to clarify that. Like when you look at Japanese companies, or even Korean companies, you want to make sure that they're more export driven. They're looking at the bigger market out there, right? So that is a very different discussion altogether.
Exactly. I mean, like every stock, I kind of tend to value them, and you can probably tell that I'm happy owning a stock that doesn't grow. That's fine.
Yeah, I can tell. It's like you're like the only guy so far that's like, it's okay, no growth, it's fine. Value.
That's fine. Well, it depends. It just happens to be the case that growth stocks are really popular right now, and I know just from experience this kind of horizon that people have, like how many years forward are you willing to look until the stock becomes like reasonably valued? And it used to be like 3 years. You could have like Tencent trading at 3, good multiple 3 years out. Maybe not quite, but almost. And whereas today, like Tesla or Apple, you got to look at like 15 years out, which is fine, but most people, they don't have that kind of patience. So, it's just a challenge. So I'm really conservative, and I don't mind owning. If you can get a stock that's going to trade like way below EV/EBIT 10, like below operating profit multiple of like 10 in a 1 or 2 years, fantastic.
What is your terminal growth rate assumption then in your DCF model? If you don't mind sharing.
Yeah. Okay. So I
Because you
at
sound
the
like you don't even
moment-
care about it, right? So I want to know what is your base assumption of terminal growth.
like implicitly, it is discounting at like 10% implicitly, or sorry, let's say at 7-8%. But I don't actually do it. I don't do DCFs. I just look at kind of what multiple I think is going to trade at. And typically for like no growth stocks, I assume like that kind of multiple. Like if it doesn't have any debt, then PE 13 on a no growth stocks is probably okay, 12 or 13, which would be like pre-tax. Typically, it would be something like 10 for a no growth and non-cyclical company. Or you choose like a mid-cycle kind of margins or earnings for cyclical. So that's the way I look at it. And or if there's a company that has unusually good track record in compounding their capital or growing their earnings, you can have a much higher multiple. So I used to own this company called Swedish Match, and I bought it when it was 15 times operating profit, which is a high multiple. I think it was PE of 17, 18 or something. But it's fine because they keep growing every year. Like every single year they grow, probably including buybacks and everything, probably 11-12%. And they have all sorts of new products that will serve as catalyst, which is fine. So I'm not against paying up, but it's got to be like secular growth. And if you have secular growth, that's great. But so like my pain point would be like paying more than P20. I think it's unlikely to happen.
Dude, that's why you're out of the US. Right? Everything there is easily above 2030, right? So okay,
that's right.
okay.
Yeah. So Fritz, how do you know when something is a value trap then? Like if you see, say, like there's 20 different options, right? And it's trading below book in some way or your calculation. How do you know which one's a value trap and which one to actually go into?
Instead of buying, buybacks, looking at what the management team has done in the past. Like look at the share count. Is the share count flat or is it decreasing? That's very good. Look at the share count for Swedish Match, for example. Keeps going down for decades. That's pretty nice profile. Whereas in many other, like BitAuto, it would every 3 years they just issue more shares, or like whatever. There are many such stocks. That just makes it really quite hard to grow EPS if they keep issuing shares. So that, to me, that's a value trap. And then when it comes to frauds, that's another completely different category. Then you gotta be really careful. Like, and I think I have some experience discerning these patterns. So certain categories of stocks, maybe small caps in China, or maybe I'll just be a little bit more careful there. Whereas maybe I'm not as careful in Thailand or Singapore.
Okay, interesting. I think we can definitely talk a lot more about Thai companies next time round. So that's pretty fun. Interesting news, interesting space, I think, for a lot of people to explore. Yes. So I think we're gonna wrap up. We're definitely beyond the hour. If you guys have no extra questions, then we're gonna close it tonight. If you have any questions, you have 5 seconds, okay, while I complete my closer. So yes, thank you for spending time with us today. Stay tuned tomorrow for more good content. Okay, actually there are more good content, but stop. Geek Out, it's gonna end. It's the last one. So yeah, thank you, Fritz, for joining us. This is the last one. If you wanna, hang out with us, join our community Telegram group, the Financial Coconut. You wanna be a member so you can get early release, premium investment content, discussions, closed door discussions, and all that good jazz. Head over to thefinancialcoconut.com for more details, and also check out Asian Century Stocks if you wanna find out more about what Fritz is looking at and all that good stuff, right? So final shout out to our sponsor, Moomoo. Thank you. And so download the Moomoo app today to open your Futu SG trading account, and they have a wide array of in-app materials for your continued enjoyment and learning experience, right? For all of you that tune in, thank you for spending time with us for the past 8 episodes. I'm so happy now I can take a break. Okay, so we can take a break, but I think we really enjoy doing this Geek Out with our guests and all of you. So we are really considering doing this weekly, right? So, but we're going to take a break first, regroup, and we'll come back. If you like it, share the episodes, like it, tell us you like it so that I can have leverage to tell the team we should keep doing this. Okay, thank you. Thanks for joining us. Appreciate your time. Bye, Fritz.
Thank you so much, Rudy.